G'day folks, Jim here from FX Charts, Monday the 8th of September, welcome. It's been a pretty hectic last few days really in the market. The Northern Hemisphere, now they've returned from their summer holidays, it's all getting pretty active. We obviously saw a big sell-off in the euro last week on Thursday once Mario Draghi announced his easing and adding liquidity into the EU system. Then on Friday we had the non-farm payrolls. They missed badly, expected to be up to 20 and only came in at up 142,000. The euro though, it remains very heavy and it was really unable to take any advantage of that. And despite what probably should have been a bit of a sell-off in the US dollar, didn't really eventuate, and the market really spent much of the day just consolidating. Then over the weekend we've had a YouGov poll in the UK suggesting that the yes vote for independence in Scotland actually now has 51% of the overall vote. So sterling's taken quite a hit here on Monday morning in early New Zealand, and it looks as though if the yes vote does actually come about, which is on the 18th of September, then sterling's got an awful lot more downside to it yet. So we'll go and have a look at the charts though and start off with the euro. As you can see, we had the sell-off. This is the ECB announcement. That sell-off there down to about 129.20. And you can see that as far as the non-farm payrolls are concerned, it really didn't have much of a bounce. It did get up to about 129.85, but it closed at 129.5. And I think in time there's plenty more downside ahead for the euro. Now, in the meantime, though, these 4-hour charts are pretty oversold, and I think they need some time to recover. Now, we haven't got an awful lot of data out this week, really, until the US retail sales on Friday. Today, we've got the Sentix Investor Confidence survey in the EU, but I don't think that's going to have a whole lot of effect. So I think we're probably likely to consolidate, to be honest, between 129 and 130. The downside, though, the dailies suggest that eventually we are going to head lower, and this major rising trend line here and the previous lows down around here, they come into about 127.55, and I think that kind of 61.8% move of the whole rally, the 61.8% retraces about just under 128. So down at 127, sort of 90, 50. I think I'd be looking to take back some shorts there for the first time of trying, because these levels way back here in early 13, mid 13, they should lend some support. Having said that, if we do break down below 127.5, then there's really not an awful lot to stop it. There's this slowdown here. About 120, where's that, 126.60, but then below there's nothing really until the 76.4% of retracement at about 125, the figure. Further out, eventually, I think we're probably heading right way back down here, but that's a long way off yet, and that's just around above 120. But in the short term, as I say, I think consolidation is the name of the game. We could easily go back up here towards this 131, the figure level. The 100 and 200 hour moving averages, they're at sort of 130.70 and 131.20. So this, as I say, this 131, the figure area, probably not a bad sell. And I think if we do see it, I'd keep stop losses probably above this high here, so 131.5. If we go above there, 131.60 or so, if we go above there, then we may see a squeeze back up here towards this sort of 132.20 area. So I'm looking to sell into a rally at around this level for an eventual resumption of the downside and an eventual break of 129, which I don't think we're going to see today, but an eventual break of 129 leading towards 127.5. Dollar yen. Dollar yen broke above 105. It broke up to a new high 105.70 on Friday. That's before the non-farm payrolls. The miss in the non-farms brought it all the way back down here to 104.70. It's kind of ignored those now, and it's looking as though it wants to squeeze up to the top side again. The hourlies are looking slightly positive, and the 1 and the 200 hour The 100-hour moving average at 105, that's probably going to lend some support today. And below 104.70, I don't think we're going there, but this 104.5 level should support it. The 4-hour charts, they're telling us not to expect too much on the top side today. And I think we're probably stuck in a 105 sort of figure 50 consolidative range for a while. The indicators here look as though they are running out of a bit of steam. So while I do think that further out, as I'll show in a second, we've got a lot further to go on the top side, just for the time being, more trade around 105 looks to be the order of the day. On the daily charts, actually we need to go to the weekly charts really. Let me just get rid of that number. So we've come up here, we're at this 61.8% retrace is proving a hindrance so far. We have really broken above it. It did get to that 105.70 the other day. This level here is about 105.5. So we have been above it. Eventually, I think we are going to go higher. The dailies are looking as though they're building up some positive steam. And I'm looking for a move eventually up to sort of this 110 area. Now, that's a long way off yet. And if we go out to the monthly charts, you can see we're going to see some resistance here at 106.5. That's the 200-month moving average, I should say. So I think that's going to be quite difficult to overcome. But once we do, then I do think we're heading up towards 110 and eventually possibly up to this sort of 111, 112 area. Sterling, well, that's taken quite a hit this morning. Let's go and have a look at the hourly charts just briefly. It opened up around 160.180, having closed the Friday at 163.25. Opened up at 161.80. It's trying to close the gap, and it could well continue to do so. But all is always going to depend on the outcome of the polls. So it's going to be very difficult to trade. But if Scotland does vote yes for independence, then sterling has not, by any stretch of the imagination, finished its down move yet. The 100, where are we? The 100-week moving average is down around here, about 161, 160.75, and the 50% move. There's a good support down here around 159.85, 160 area. That's 50% of this whole move up, it's yes, there we are, 160 the figure. A break of that would take us back down to these lows here, so 158, 158.5, and then down there to sort of 157.20. Now, as I say, that's a long way away. That's a big call. But if Scotland does vote yes, then sterling is going to take a major hit. Having said that, a lot of the sell-off is taking place already, and if the vote comes in as a no vote, which you'd have to think they have got enough sense to actually vote no than to stay within the United Kingdom, then the bounce is going to be equally sharp. First of all, we need to see a return to the Friday close, 163.25. Let's go back to the 4 hours here, 163.25. And then the FIBO resistances start coming in around 164, the figure. And then at this sort of downtrend resistance, that's up at sort of 165.5 at the moment. But we could easily see a bounce back there eventually. If the market gets itself overly short, it's going to be very volatile. Personally, I think I'd probably leave sterling alone for a little while. I think there'll be plenty of opportunity after the vote, with not quite so much gapping, but it does look at this point in time as though it's headed lower. And certainly the 4 hour charts are heading lower, but they are oversold. The dailies equally, they've got some negative momentum, and the weeklies look as though they're heading to the downside as well. So all up, I think probably selling rallies is the way to go, but I think I'd probably leave sterling alone at the moment, just in the interest of protecting what I've actually got in my account. Swissy, like the euro, I think dollar Swiss is heading higher over time. Today's the 3rd anniversary, I see, of the Swiss National Bank bringing in the peg at 120. But I think if anything, dollar Swiss is probably a better buy than the euro. Selling the euro, it just looks a better trade for me from a technical point of view. Now, the initial support here is back down around 92.60. That's the 50% area of the whole move down. Now that level there at 92.60. If now that we're above it, I think we should probably stay above it. If we don't, then this might be a bit of a false break, and we're going to see some support down here around this 91.70 area, which was pre the ECB announcement. And below that, then we may head back down to this sort of 90 and 3/4 level. Now, as long as we stay above that, we're still in the uptrend. So I'm looking to buy dips. I think you should leave room to buy dips, but I'd have a stop loss on a break of the rising trend line, or more ideally, really below the 200-day moving average. But that's a long way away now. So on the top side, we're currently at 93, just over 93. First port of call, I think, is up around here, the 61.8% resistance, which is at 94 the figure. A break of that takes us on to at this high back here, so 94.5, and then on to 95 and 3/4. Now that's going to be a way off yet, and I think we do need to consolidate. The 4-hour charts, as I say, pretty overbought, and we could actually see a bit of a dip. So I'd leave room to buy a retracement down towards this sort of 92.25 level, and possibly down here at sort of this sort of 91.50. But certainly, I do think in the longer term, the dollar's headed higher. The Aussie has been a bit of a star, really. It's been performing well. It got up to 94 cents on Friday after the non-farms. Bit of a spike up there. It's opened this morning with a bit of a gap lower. That's rapidly closing that, basically out of some sympathy with the sterling. I'm a bit. I think the Aussie is probably headed lower over time. Lower commodity prices are going to weigh on it. We've got ANZ job ads today. That'll provide a little bit of volatility, but it'll be the unemployment numbers on Thursday, which the market will be looking forward to. That number's expected to be a rise to 6.4% and a drop in job creation of about 14,000, I think, although that could change as we head towards Thursday, with a participation rate expected to be around 64.4% actually. So in all, I think the Aussie remains choppy. It's in sideways mode, but it is looking big, but it could continue to use this sort of 93, the figure 93.30 as a bit of a pivot. The top side is going to see good resistance up here from 94 to 94.15, where this we've got descending trend resistance, we've got FIBO resistance, and potentially a bit of a channel top up here. So I think 94.15 will be very strong resistance. I'll be doubtful of seeing it above there until at least Thursday, and then we'd need some strong unemployment data, which looks a little bit unlikely. The downside looks well supported now to me at around 93.40, 93.30. I doubt we're going below 93, the figure at any stage early this week, and that's this red line, which basically goes back a long way, but it has been acting as a pivot, and 93, the figure, is now where it sits. The base of the supposed channels around 92.70, and then you've got bottoms in here around 92.60 and sort of 92.36. A break of the downside eventually, I think, will happen, but it's some way off happening at the moment. And with yields as they are, and the RBA looking to be on hold, and the ECB now charging negative deposit rates, the interest will remain in the Aussie to buy it just on a yield basis. So any downside is going to be slow, and we'll see some good offshore buying interest. The Kiwi, let's have a look at the Kiwi. The Kiwi has not performed so well. I think it had its run up as the RBNZ were looking to raise rates. They have now finished their cycle, and the next RBNZ meeting is this Thursday. They're looking to stay on hold again, and probably for quite some time. The ongoing weakness in the data recently, and the weakness of the commodity, the milk auctions over there, has seen the pressure piled onto the Kiwi. Now it's come back down here to sit at this 50% pivot of the whole move up. A break of the lows around 82.60, 70 would see a move back down here towards 81.5. I don't think that's likely to happen yet. The dailies look a little bit unsure either way. They may actually be turning a little bit higher. So if the Aussie stays supported, we could see a little bit of a drift higher, but 83.5, 84 cents really is probably about it on the top side. And I don't really think we're going back up here to the 200-day moving average anytime soon, to around 84.70. Nearer home, the Kiwi keeps on trying to break above this wedge that was formed here. It's made several attempts to try and break above it, can't, and it has come back to sit below it again. Now, if we can break above the wedge and really get above this sort of 83.5 level, then these highs up here, as I say, 83, 88 to 84, 84 the figure, should provide support. But I think for the time being, we're probably going to consolidate further, realistically, until the RBNZ meeting, and probably more likely until the US retail sales on Friday. So I think it's going to be choppy, but generally sideways. So okay, that's about it for today. I think the theme is that we're probably like to be in for some choppy trade. Sterling, I'm not sure about. That all depends on political headlines. But sideways trading elsewhere, probably until the retail sales, US retail sales on Friday. We've got a lot of the individual EU countries though putting out some CPI numbers on Thursday. So a soft reading there could once again put the pressure on the downside on the euro. So today we've got the Sentix, as I say. From Japan, we've got a bit of data. We've got the GDP and trade numbers, and that comes ahead of tomorrow's BOJ minutes. And if the minutes suggest that there's a move towards quantitative easing, then dollar yen may push above that 105.50 level, but I don't think we're going above there today. So that's about it. Have a very good day. Have a good week, and I'll probably do a video later in the week once we've seen a few developments. So until then, have a good one. Bye.